Hey, g'day, Trey. Sam here from Trade to Prosper. Today I'm going to talk about gold and give my macro thoughts. Here we have a monthly chart, and if you understand the macro structure, then you will understand that this is a bullish formation. So what we have in the past is this monthly level that's clearly was resistance, and we break through it. And I can just label that with monthly. I'll just make it thick. That was an inverted head and shoulders. Complex one, but it was there, there, and there. Inverted head and shoulders, that was a breakout, and it had its target up to there. How do we know that was a strong target? It doesn't matter. The fact that we had, at this point, free resistance, so that's a true trend line or resistance line, because we've got free touches. And we also got this level here. Now, this looks like a broadening wedge of some sort. And what it is we have an uptrend. We have this sideways. And can this be a reversal? It can be a reversal because of this level here. So if we were to lose this level, it will be likely to come down here, and then we've got free touches even. So then it becomes symmetrical, then it's likely to drop more. However, what are my thoughts? I believe this is a bullish one. I think this is a continuation pattern. The fact that this is aligned with the Wyckoff. So if I was to align the Wyckoff here, so we'll go a sell and climax, secondary test, and the spring. Spring was a good entry. Spring was right down there. And if we were to put, let's see if there's any confluence with volume profiles here. Let's see if there's anything there. So our volume profile, obviously that's previous top. There was a volume there. So that explains this level, 0.786 as well. But nothing really stands out except around here. Nothing really gives us the reason for that there. Maybe from a you need to understand the psychology of the market as well. So if there was a lot of trades coming in this level, let me just do this for a sec, and you need to understand this. There's a lot of longs coming in from here. Let me get that tool. So the longs came in there, as well as another longs came in there. So what the market does is it looks for liquidity. So we had a buying climax, we had our sell-off, we had our automatic response. Usually this is classical Wyckoff. And then it's either here, well, this is usually the third touch, but what the big bulls or the market look to short these, squeeze these longs out this level, because all the stop losses would have been there. So they come below and then take that liquidity and then back up again. Nasty. So now we're going sideways. I believe that monthly level in here, we're going to be around here for potentially a little longer. We might be able to get that support from here, this monthly level, and then find a bounce. So I will look, and didn't quite get there. So rejection candles on the monthly. So we might come down here and then up again. And then that's our upward market. Now, how does this fit into our elite wave formation? Very well. So if we have our A, we can say that's B, that's C, that's D. So the E is where we're looking for. Where's an E a good entry? And I'm going to show you more in terms of strategy. So let's look at, again, looking the volume profile. Let's just do it over here. And I'm going to go on to the weekly just to get a better feel for it. So that is a strong level of support based on this volume profile. So this we might be able to. So we need a bullish weekly. I do believe this is going to be a good entry. You can see why. Makes good sense that we're going to entry. That is a topping off structure on the weekly. Let's zoom in a bit more. Let's put our elite wave count in there. Let's just change that. I was doing some stuff before. Does it have confluence? Yes, it does. It does have confluence. So even though we pull it back down to this level, you can see the rest how you can see how all of it lines up with Fibonacci at the one. So the point 5 or the 618 is going to be one of our major support levels. So let's look at this. I wouldn't look at just this level, the monthly level, because it can wick down. Okay. Let's just clean this up a bit. Very bullish gold, and why not? Because mass printing is taking place, and the BRICS is going to make gold much more expensive. So you need to keep your eye on the BRICS. They're backing their currency up with new currency potential with gold. So gold is going to likely to keep going up. There's a breakdown on the wedge on the weekly. So I do feel like this will come down. We had that candle, the weekly pullback. So we had a bearish candle. It tried to go back up and then pull back down. So at this level, I do feel like the point 0.5 might hold it and then just come back up again, or it just slips a bit further and the 0.618. 0.618 is our major support level. Now, if it's not obvious level that this was going to be a major entry. Now, would they front run it? Yeah, so the people waiting here might miss out because they might just push it up from here. Okay, but the market is definitely. I'll be looking. I would average here and then put more in there. Definitely. So that's how I see it going. This is our wave 5. 1, 2, 3, 4, 5. So that is a nice wave 5. What we're having is a correction. So if we were to add, let's just do the 2-day chart, which is more granular. And let's add in our elite wave count. It should do it automatically for me. And here we go. Where is it? Didn't do it, did it? Let's do one daily. There we go. That's better. So you can see our elite wave count. Beautiful. That's 1, 2, 3, 4, and 5. And so what we're having is the ABC correction of some sort. Now this could be A, B, and then C. You can see how it suggests it could go deeper. So we can have a deeper pullback. And those deeper pullbacks are based on Fibonacci as well. So if we were to do this first, this will be our likely spot for the mild ABC. And then we can have a deeper ABC, which is that, and then further deeper. But this trend line could play a role. Yeah, so we have an upward channel as well, a broadening upward channel. And so that is, I'm going to see weakness. I might see from here, let's see if it goes there. Let me just change the template. That's our golden ratio, give or take. And the other one is from here to that golden ratio level. And we are seeing resistance. This is looking like a bearish structure for the time being. Pretty much a rising wedge. Let's just move this for a sec. Get rid of that. It does seem like a classical rising wedge. So we got our 1 bounce, 2, and we might get that 3. We might even get a double top and then come down. If it goes above like that, then it's already bullish, and I would enter that. Otherwise, if it does this is going to be real hard to trade. It's not a good spot. You can see that. If it goes above that, I would trade it and just go up to there and take some profit as it might pull back, and then we see what happens there. So that's a special neckline, and we might go sideways like that, And if it does that, we know it's going to be break up to the upside more so. So we might drag this out, or we have a number of scenarios, as you can see. The ABC correction and then up. That's on one scenario. If this is more bearish, we have this and that. That is bearish, and I don't see that happening, but who knows? The fact that the US is going to probably print another or raise the debt ceiling, it shouldn't. It shouldn't make it go up. I mean, the gold shouldn't go down. It should go up with a lot of things going on, but there's a lot of paper gold out there as well. So, but these are the thoughts I have. Now, going back to the monthly, I want to show you the last part. Let's just clean this all up. You see this formation. So we have our cup already in place. Let's have a closer look. Let's just put it up there. So you can see how that's taken place. So the cup has taken place. And in many cases, it doesn't pass the neckline. So this is playing on top of it. So it's holding on top and it's likely to continue up. And if we want to look at the real bearish scenario, if we lose this level, we go bearish. All right, so that's very bearish. But I do feel like we're going to go sideways. It could hang around the top part of it. If it comes to the bottom part, it's going to be bearish. So I do see gold hang around above this level for some time. Could go wide sideways, like I showed you on a small time frame. And you can look at previous RSI, and this is the monthly. Yes, it is. And you can see from the monthly on the RSI. Let's just get rid of that for a sec. It shouldn't belong in the monthly. You can see our RSI, a main support neckline. It went down, it went back up, found some resistance, came down, found that support on the RSI, and now we're going sideways for a while. If you want to play it conservatively, wait for the breakout from this trend line on the RSI, on the monthly. And then we can look on the weekly as well. But this formation is there, just slightly up, it's playing out there, and then we're going to start seeing that. What are our targets? Let's have a look. There are our targets, initial targets. There is another way of looking at this, and that is pretty much also looking at this wave. Let's just do this for a sec. Template. Reverse. I've got to clean this up. And there you go. So I do see, just by if this is a wave 3 to 4, then I do see this as a bit of a strong target, strong rejection, but it's still going to go up. So that's our first level of first target, potentially there, and ultimately that's going to be a strong resistance, but I still feel like it's going to go higher. Yep. As you can see how that looks like. We can also do a fib extension. Let's see how that works from there to there. So 0.618 is there as well. So that could be our strong resistance level there. Hopefully you can see it. And then if it breaks above that, you can see how I'll start looking at other levels. This could be, so I do feel like this could be the ultimate target. About 3,200. 3,200. 3,000 psychological round number. Here that was 1948, so 2,000, close to 2,000. Here was a 2,060. That's a psychological number. Pull back. 3,000 is the next one. But these are the levels that I see playing the next 5 waves. So if this is our 1, 2, potentially 3, 4, potentially 5, like that. Continue on. I'm going to leave it at that, guys. Hopefully that gives you some idea on how to trade this market. Please give me a like and share, comment and subscribe. Come to my YouTube, and I'll talk to you soon. Cheers.